in the first few months of this year in SPAC IPOs, versus the previous years, and not last year, because last year was a big year when people were raising SPAC money, but it used to be 1 million, 2 million, 3 million. It was kind of that type of trajectory, and now we're talking about what has become a real legitimate way to take companies public. And so you've seen companies like HIMSS, Clover Health, and others pursue SPAC transactions as a way to be able to access the public markets and turbocharge their businesses. And the way it typically works is once you find the company, you then make the announcement that the company is going to merge in. You file your S4, which describes the transaction to everyone and gives the investors options. And typically, as a part of the SPAC, you'll raise alternative financing as well in case the trust doesn't come in or in case you need to raise more money above the trust funds that were raised in the initial IPO. And so you will do something called a PIPE, which is a private investment in public equity, or you will do what is now happening more and more in the SPAC market, a convert. And so we, as an example, raised $285 million, $250 million in a convert, another $30 million in a $255 million in a convert, another $30 million in a PIPE. And so, that's the way that we chose to get the financing done. And we found out that 98% of our trust is going to stay in. So that's another $168 million going to the balance sheet. And pro forma, the company is going to be, one, in a great financial position, but two, the ability to really grow the business. We'll have all the working capital that we need to execute our plan with some funds for potential acquisitions so we can be opportunistic there as digital health consolidation continues.
Break down the advantages of SPACs and why now? Why is this a thing in 2021? And
Yeah, I think, and people have also asked, Louis, like, why is healthcare so big in the SPAC world right now? So I think a few things have happened. One, advantages to the SPAC, yeah, speed to market, and valuation visibility. I think those are primary ones. The IPO market tends to take longer. You have less control over the end valuation of the business. And by control, I don't mean that the company's going out, control the valuation, but you at least have better visibility into what your rollover equity will be into the SPAC and what's going to be valued. You do get public company mentorship, which I think is a big piece of the puzzle when it
hmm,
comes to making a smooth transition to going from private to public. And I think the SPAC market has really become a legitimate way to bring high quality companies public, and the market keeps gaining in sophistication. You had a second part to your question.
would you say that the SPAC trend is allowing for greater collaboration? You said that there's a public market
Yeah.
mentorship built into it.
Yeah, so the SPAC sponsors usually come with one, management experience in the given industry, but two, public company experience. And so the ability for me as a COO who has run a private company but not a public company